I'm very happy to do this presentation here. I'm, as Dr. Leber mentioned, I'm in favor of the blockchain, and maybe one of you are not and will not be happy with this presentation. But afterwards we have got like the other opinion, so pro and con together. Welcome here at the Frankfurt School. We hope that you enjoy this meeting and the building, and we are often launching different presentations and conferences in the on the topic of Bitcoin and blockchain. We founded the Blockchain Center 5 years ago because we thought that young people need this inspiration for their future career, and it's about IA and the different matrix, and it will be also for the study. Well, it is important because everything is getting digitalized. Also, finance technology, from our point of view, is very important. That's why we founded the Blockchain Center. We are dedicated to training, and our favorite program is DLT Talent Program, where we want to empower women especially to have an idea about this topic. We have 1,600 applicants, and we are coaching approximately 300 per year. That means that also these ladies have more career opportunities when changing to the companies. So step by step, we hope to reduce, let's say, the number of men and have more women in place. And we are starting with the topic. What you can see here in dark blue are the domains in the area of blockchain. What we are observing, we have got digital assets, securities driven by the electronical gap that was also improved by the government. And what is the ECB driving? Well, trying to drive. And then the stable coins, the US dollar in base of blockchain, also the euro, the franc, or any other currency. In the center, the most dynamic area, the decentralized crypto assets, the protocols. There we have Bitcoin, Ethereum, DFT, and this is in the big blue blocks, the most dynamic area. The government, the federal government, has worked a lot together with BAföG and the Ministry of Finance, because more than 2 years ago there were new rules in place, and so the new regulations are now there, and after 2.5 years we can see that banks and asset manager and for instance the Bankhaus Scheich here in Frankfurt, and the stock exchange is working on that. And for instance, for the public prosecutors, where they are looking for illegal movements. And until now we have got new areas. Since the summer last year, we have 5 bigger startups dedicated to the topics. 20 million, every company evaluated, still small. This CO2 representation on blockchain in form of tokens is a very important topic for this year. What's happening here? You are gathering together the CO2 agricultural sector, for instance in Brazil, with a German company, and then you have got a CO2 setting all around the world. This is working fine because they offset the training of CO2 is new. You have got a green field where you can establish a new company. You have to no old systems And it's a very nice area and very interesting in the horizon. We have got identity management on blockchain base. This is our ID or the register for companies, and they are developing separately. They have their own dynamics, their own players, their own lawyers, their own consultory, and assets are working different than Bitcoin or the central protocol. Especially Frankfurt is a very important city because the German government had good regulations, and good central bankers use German as test market to test several crypto currency, and we had done very good work. Maybe you're surprised because everybody is criticizing the government, but it is nice to observe that. On European level, we have got the BICA regulation, what is has to do with blockchain and crypto for all Europeans, and this is something new. Bonds are normally nationally, and bonds and securities are nationally normally regulated, and we have got really interesting aspects that are not considered by politicians. What you can see here is the adoption, and it's very important for me to foresee that why your company is not using blockchain, because this is normal. Blockchain is a topic that is interesting for retail people, for individual people. And what is a blockchain? It's a technology. And where's the killer application? Well, for me, the case is pretty clear. Please don't get annoyed. Killer one application is Ethereum, Bitcoin. Blockchain area still now has not new application. Bitcoin is really the killer application, and I will explain why. In the USA, you have got 40 million people, 60% of the population, 40 million in America that are using the Bitcoin. In Europe and Germany, the numbers are similar. You can see that the numbers in green, you see that is the upper time. That is how that is the timeline. You see how the internet has developed, and we have got 6.5 billion internet users. And the blue curve shows the adoption of the crypto. We have got 200 million crypto users, and we will get to the 300, 400 million. The main driver is also the inflation, I guess. So the crypto assets are very important. We will have different crypto nodes. You have a very simple net representation of different nodes. In Bitcoin, we have got 15,000 nodes all over the world. So to give you an idea, one node has approximately is as big like this, like a tennis ball, and nobody knows where they are. And due to the architecture, it's impossible to switch off these net because it is idea that it is decentralized. I would like to explain decentralized system, and it is the best manner to explain it with centralized system. So our world has been grown centralized. This university has got like a director, a country has a federal government, and everywhere in the world we have got a center of power where the system is represented. And the on the contrary, we have decentralized system where no center of power is established. And this is happening to this protocol. We have got no center of power, and this means nobody is responsible. No contact person, no CEO, no customer support, no website. It's a decentralized technology that is there, and nobody could be identified as responsible. In case of a problem, nobody could be invited. There are no, well, you cannot, there's no addresses. It's working in a decentralized manner. So in this sense, these decentralized approaches has been grown. We can also say that you have got, well, non-public institutions, and they are just there. Well, if something is just there and could not be switched off, and tomorrow it will be there also. So I forecast that in 20, 30 years, Bitcoin will still be there, because nobody can switch it off, and you have to think about that. It is an IT system that it will be there, always there, unlimited. And this is also a philosophical aspect. I know that maybe you cannot live with that, but it's brilliant. So we have got also some blockchain system with a center of power, institution, a company that is having a look at the system and is also establishing who gets in the system and participates. For instance, 50 banks. And we have to think about which bank could be included or not. We need a government and an organization. And then you have got a person of contact. And this is the architecture on the right side. This is called enterprise blockchain system.
And now this gets into the interesting part, because the right architecture doesn't work. 4 years ago, I would have said it differently, but minus 4 years, that was in the future. They said that both domains will develop positively, independently of each other, but we see now that in the left-hand side, I'll get into it in detail, we're talking about $80 billion per day. That's, and on the right side, 4 to 5 years of hard work, DAX, Bosch, Siemens, and at the end of the day, you have hardly any system that is actually going live, even though they had invested years and years of hard work. Hyperledger, M3, and so on. They're not relevant anymore, and they stopped being relevant. Interesting to observe that. We never expected that a couple of years back. But you look at the hard facts, you look at the figures, and 80 million transactional volume on the left side. So it's 60% of the market, and you know that from the media that last week we had a bad crash. It's from 1.9, it went to 1.3 billion. So that is quite a bit. But if there's one thing you can learn from it, Bitcoin, Ethereum, and so on, they have gone through quite well with losses, but we're only down 20%. Other cryptocurrencies, thousands of them, they went down minus 50, even minus 60%. And that's why you can see here that especially the blue chips, Bitcoin, Ethereum, and so on, have gone through this quite well. Very concentrated, in total 60% of market share. And then you get into the top 10 cryptocurrencies, 90 to 95%, and the other remaining market capitalization are thousands and thousands of cryptocurrencies, of which you should stay away from, because most of them are rubbish, and some of them are even fraudulent. You know that from the media. So don't throw all of the cryptocurrencies into one big pot. There are those substantial cryptocurrencies that are fine. They are here to stay. And on the other hand, thousands of cryptocurrencies that eventually will disappear. So this is the price curve that you know. That's the information over a period of 8 years, 2022. You see the first couple of years, nothing much is happening. It's almost a flat curve on the zero line, and then all of a sudden we start to get volatile. And you know this from the media, Spiegel, Manager Magazine, and so on. And then you have a set that goes through all of the potencies through the years. So it goes up. And then you have the logarithm of price. And you see this is an upward tendency. This is not a bubble, but you have here figures. You have the number of active Bitcoin addresses, which is of course increasing with a lot of volatility, we know that, but in the long term it is positive, and I think we have a worldwide adaptation. If you look at the biggest service companies in the world and compare them to Bitcoin, you see the US banks in the first plane, JP Morgan, MasterCard, Visa, Bank of America, and so on. All of them very, very big, but Bitcoin is bigger than that, 600 billion. When I say that, I say even, how is it that states can ignore that? Because we have a financial technology that has grown and is bigger than the biggest banks on the planet. If you put Bitcoin into the biggest investable assets worldwide, then you have a capitalization of 12 billion with gold, and then Apple, Saudi Aramco, Apple, and so on. And we are here in position number 10 as the largest asset worldwide. How is it possible that a country, that universities simply do not see that? The core of Bitcoin is the limitation to 21 million. Never ever can you have 21 million. That's technically guaranteed because of the architecture of the network. And what you see here in blue are the total existing Bitcoins that are on offer. And on the left-hand side, 2009 is when they started. It was 0 when it was started, and then the curve goes up. And now we are where it says June 2022, 19 million Bitcoins that have been mined, and in the following years to come, the additional 2 million will be added to it, and then we are at the 21 million. And that's a similar curve to what we have for gold. And this is the opposite of euro, where every day, you know, they have to print more of it. Bitcoin could go up like digital gold. So you need a room, you need people, you need computer chips, so you have to have mining assets as to be able to drive these Bitcoin mines. And the logic is very similar to a gold mine. Here you have to have the production factors. You see excavators, you see chemicals, you see workers, you see heavy equipment, and the more you actually invest in that, the more you actually get out. So you have more output in terms of gold. So you take the gold and then sell it on the market. At the end of the day, you have a profit. And this profit is the motivation for you to run the gold mine. And if the gold price drops, then you decommission your gold mine because it doesn't make sense anymore financially. So the gold price has to be fairly high for you to be doing this. And the same logic applies to Bitcoin. You have to have the production factors. You have to have, like I said, the right installations. The question is this. Is there any use that can justify using up so much energy? This is a screenshot from a tweet. Somebody said, apparently, 500 million US dollars were transferred in overnight with a few clicks from one point in the world to another. The transactional costs were $15, a couple of clicks, and then try that with gold. This, I mean, that is the value premise of Bitcoin. You can send it from one place in the world to another, and you have very, very low transactional costs, and the running time is a couple of seconds or minutes at the most. But the main point is this: it is unstoppable. You have an unstoppable value transfer. You can have them, you can transport them, transfer them, and possess them in an unstoppable fashion. So nobody can stop you from doing that. So nobody can stop you from executing your will here. So it's resilient, so we don't have a problem with it. It's constructed in such a way that it cannot be confiscated by anybody. So I go to the port, I can take away a yacht from an oligarch, I can take away a house from somebody who's going under, and I can steal a lump of gold. All assets somehow are movable and can be taken away by force, but Bitcoin cannot be confiscated as long as that person has its own storage medium. And that is very important for the future, because you will see that not being able to confiscate it is very, very important. And one important thing is this: we need this not only in Germany or in Europe, because in Europe we have good institutions. We have a bank, you have your bank account and you have euros in there. You know that it'll still be there tomorrow and also next week, but there are millions of people in the world, billions, who don't have institutions of that nature that are so reliable. And there, Bitcoin is being appreciated because it is a substitute institution. These are countries with high inflation levels, or countries where people are used to institutions that are not reliable, so that the value can be transferred into the future here. Okay, there was a question here. The interpreter cannot hear the question. Yeah, we need a microphone. If not, we have a problem with the people in the live stream, because yeah, I can repeat the question. Oh yeah, please do repeat the question. A very important question. If I hold a gun to somebody's head and can that person then transfer the Bitcoin to my account? Yeah, that person will give you the password, but the person can also say, I forgot the password, or I give you the wrong password. Everything is possible. You're right. You're right with your point if you're forced to do that. But nobody can just say, take away that lump of gold or that yacht that you have. You need you need the owner to cooperate with you in whichever way possible. That's a fine distinction compared to other assets. Of course, you're right. At the end of the day, it might be possible, but I have another extra level. But the point that I was trying to make is this. In Germany, we don't really need it because we have the rule of law in Germany, and my money in the bank is safe, but there are many countries in the world where that is not the case. And there, cryptocurrencies are on vogue. And I think, of course, Bitcoin, but I also mean other cryptocurrencies like Ethereum and even dollar on Ethereum base. Because if you think the volatility is too high, Venezuela, Turkey, what have you, where the inflation levels are exceedingly high, then you can have it on dollar base. So you have a password and then you have access to it. I will repeat the question. The transactional time and the throughput. The answer is the transactional time. So I transfer something and somebody in Argentina is getting it. With Bitcoin, that takes maximum half an hour, 30 minutes. With Ethereum, 1 second or 10 seconds perhaps. And the transactional throughput, you can calculate from that, depending on how many you can do per hour. With Bitcoin, it's little time, but with Bitcoin, you don't really need to think about that because it's a settlement layer. So big transactions can be carried out with a very high level of IT security. And Bitcoin Lightning Network, that has a higher inner security degree, but there is the question of speed. So there are different types of transaction. So smaller amounts, larger amounts. For the larger amounts, you need IT safety, and there it takes a bit more. With smaller amounts, you don't need that level of safety, and therefore you can accelerate the transaction. Perhaps afterwards over coffee we can discuss this in private, but that was a brief answer. What you see here is from November of last year. In red you see those countries where the inflation rate is above 10%. Now Canada, America, also Europe, we are at 7 or 8%. In Estonia we're at 19. That is high. So this map would have to be updated, and even Iceland. Okay, why is this important? Because in those countries the buying power is weakened, and people invest in assets, tangible assets, gold, real estate, and so on. And that, of course, has an impact on Bitcoin. And also in Germany, people are investing in real estate, and that's why real estate prices are going up.
So at the end of the day, we can see that the money is invested in some real estate or in something that is tangible. So a couple of years ago, they accepted, the Republic of El Salvador accepted to accept the US dollar, and they don't want to depend on the Fed. That's why the transaction costs have increased, and then the president included the Bitcoin as second currency of the country, and we have got two currency right now, Bitcoin and the dollar of the United States. This has been not a huge success because it happened half a year ago, but there are hundreds and thousands of people that are using it already, with 6 million people of population. So in Europe it took more than 10 years to have a European PayPal, and in El Salvador with 6 million people, they are on their way. You can see it here where you can pay in dollar or in Bitcoin, and the receiver can accept dollar or Bitcoin. So the inflation rate in the Corona year 2020, where the government spent a lot of money. And on the right side, you can see the inflation where the prices is raising up. It's not a European or American phenomenon. It's happening in all countries, even in Switzerland. And there, the last numbers from April, you can see Estonia, 90%. It's really amazing numbers. So we have studied together with a Swiss company the crypto assets, the crypto funds, because we have a new asset class, let's say, and you can see that step by step we have really an impact. In this slide you see when you include 50% crypto currency in a fund, then you see that the crypto is developing good generally. And on the lower part of the panel you see in the green that the broadouts are also very good. They have got a high volatility. So this portfolio is not, it doesn't make sense to include too many crypto allocations, but 4% crypto allocation is, statistically speaking, makes good sense. You see the green curve that shows clearly that the return and the performance is getting better. You're doing that in ACATIS. So 5% even. So what the maximum drawdowns are, even including the volatility, are not as low. They are buffering okay, and with 5% it's a good statistic result. It could make sense. And the crypto assets are very interesting. We don't have only the crypto currency, also the fund. On the bottom left you see 10 million, or under management even the 30 or 40 million that are the largest one, rarely more than 100 million. In this type of form we have approximately 1,000 worldwide. Half of them are capital funds, 450 are liquid crypto funds with different strategy. We have long and short models, classically arbitrage models, and different types of variants of them. And maybe you know, we are from traders of Goldman Sachs that are already working with the cryptocurrency, because you can include them efficiently. Due to the high volatility, you have got several opportunities, but they are always small amounts, because this system also is very small. So most of them are on Cayman Islands or Virgin Islands or Switzerland, Liechtenstein, and of course the US by funds by legal domicile. But the Luxembourg government is still not working on blockchain. Germany is performing better than Luxembourg. That's something really new, because this rarely happens in this type of aspects. So we have got also in different funds you can include the crypto and allocate them, and depending on if they are beta or alpha orientated, you have got really different solutions. Maybe from your point of view it doesn't fit, but I want to show you that there is something new happening, and we have got an asset class that is well, working out on their own way. I will close this presentation now, and I guess you have got some questions, whatever you want to know, statistics. So we have still 8 minutes, so that's great. And the micros are in the audience, so maybe you can send them to the other participants, give it to the other participants. You have compared the internet with the development of the blockchain and the killer application Bitcoin, that there are similar lines. I have checked on my smartphone. Yesterday I bought a podcast micro. I have bought food for my dog. Yesterday a friend of mine met a girl through Tinder. I received several emails and sent them, and I have posted something on LinkedIn that are really good applications that are very useful. I'm not an oil oligarch, and I'm living in a very stable country. For people like me, in our country, in a stable democracy, and where is the practical use of Bitcoin? Well, except that I can sell it to someone else. We see it on the central bank and the statistics. People can also, well, buy or purchase real value, asset value, and I would include Bitcoin to real value. Well, we are living in a very stable country, that's true, but there are 100 million people that are not living like that. And there, the Bitcoin is very useful. You see that in Ukraine, people are losing their home. But those who have a part of their value invested in crypto, at least could take with them their values. There are a lot of stories about that. So there you can see the value of the Bitcoin. We are living very good because, well, we are lucky, but there are hundreds of million people that are living on the earth, and we have to take them in mind. And these people who are not living in a stable situation, well, they have got these volatility, but still, 3 years ago, the Bitcoin was $400. There is a volatility, but we in month, weeks, and quarter level, you see no change. So for long term, it's very good investment. So some questions from Dr. Leber. I have several questions. So from my point of view, the Bitcoin is not suitable for to pay something, because it is really has got high fluctuations in value. I think people in El Salvador have lost a lot of money. So if you appreciate Bitcoin as a currency, can you explain in some manner the value of Bitcoin? So $40,000 are justified, but can you justify it in another way? Just what is the value of a Bitcoin? And the next question, when 21 million Bitcoins are there, is that the end of the mining, or do you still need some mining? And that's all. Thanks. What was the first question? The first question, if there is some real value, some tangible value. So I will start with the value. This is as similar to gold. Why has gold a value from 1600, 1700 or whatever? You cannot explain it because gold has no cash flow. The Bitcoin theory, the theory from this ecosystem is the following. You have got the possibility to the stock-to-flow model. It's similar to the raw material market. You have new gold through a gold mine. If you have the existing gold and divide it with the new gold coming to the market, there is an increasement from 1.7% due to the activity of the gold mine. And the Bitcoin logic is 61. The hardness was at this point. And before Corona, we had hardness of euro, dollar, etc., was higher than the gold, because at this moment euro and the dollar was very stable. Now we have got an inflation of 7-8%. This is a hardness of 12, 13, or even 15, because this hardness of the euro is under the hardness of gold. And what's happening? People go to Degussa and buy and purchase gold. But this is happening slowly, because first the people have to know that there is an inflation, they have to decide to buy gold. But here we will see, well, people tend to move their purchase power to a strong asset, and due to this logic, in the next days and the next years, they have to get out of the Europe and buy real estate, Bitcoin, etc. So second question is still there, where we have got two following questions, and Mr. Leitner needs a lot of time, so we have to press a little bit. So we have got the live team stream, so this is my challenge. I try to follow our program. Second question: what happens when there are 21 million Bitcoins? This is a process that is slowing down. 21 million Bitcoins will be reached in 2140, so we have got still more than 100 years to run. But considering the Bitcoin protocol, there are different methods to create money through Bitcoin.
So for a Bitcoin mining outfit, you need to invest, and like I said, for the next 40 years, it will be that there won't be any further new Bitcoins, and then the transactional costs that you have for a transfer will be added. It's like a stamp you put on an envelope, and then this stamp will be sort of your fee, and the mining company will take that, and then the network will shift from 0-100 to 100-0 in terms of rewards from Bitcoin mining, and rewards will be turned into transactional costs and transactional fees. I have one question as to the energy need. Ethereum needs less because they have changed their technology, and if I understand this, something else will happen with Bitcoin so that their energy usage will be lower. Unfortunately not, because the governance is such that it can hardly be modified. Any modification, any change will have an impact on the security, and that depends on the software code, the way it has been written, and therefore proof of work and the power use, that will not change. But it's not the big issue. It's not the issue how much power you need, but it's actually the CO2 footprint of that. Because why? We have, Christmas lighting, we watch Netflix, we play computer games. All of that costs money. Nobody worries about that. Statistically, every other Christmas light is also emitting CO2, but nobody talks about that. With us, they keep talking on. What about Netflix? I mean, Netflix is using up a lot of energy, which is okay, And that is what the European Commission did. It put it under the EU taxonomy. So therefore, it's a fairly okay solution as far as I'm concerned. So if you do Bitcoin mining, you do that with renewable energy sources. In America, even today, and in Canada as well, there are 8 companies that are at the stock exchange that do Bitcoin mining. And now they are in the capital market, and you see that the majority of these companies actually do their mining with renewable energy. I'm not trying to greenwash it, don't get me wrong. The CO2 emission is really shockingly high, it's egregious. But I think in the long run it will be better. Okay, last question. So you do simulations, quantum computers can do that too? Can it be that the entire logic of Bitcoin can be done by a quantum computer? That's a risk. That's a risk, of course, because the quantum computers, we don't know to what point they will have an impact on cryptography. That's not only for Bitcoin, that's the same for any ATM, any kind of assisted system where you have IT security as an issue. It will be a problem for all of them, but also for Bitcoin, sure. So we don't know then at what point that will kick in. However, the residual risk is there. Great, thank you very much. No risk here, but you have a couple of calories waiting for you. Thank you so much.